Hi, it's Jeffrey Cohen, Chicago Quantum. How are you? Just giving you a nice update on October 29th, Friday. Right, we're getting back in the swing of things. So go ahead first off and ask me anything. I'm opening up the chat. If you have any questions, I'll try to answer them online. We can have a little bit of a dialogue through the chat. Go ahead. Ask me anything. Nothing's off the table, right? So one of the things I want to talk about today is wheels, kind of circles within circles, right? So trends in the market, what we're seeing, and why it matters. And so we are seeing some things that are very interesting. I'm going to pop up some stocks that I'm looking at kind of actively while we're in play here. And each of these stocks has a story. I'm also going to talk a little bit about some due diligence we're doing on ATI Physical Therapy. ATI Physical Therapy is a company out of Bolingbrook, Illinois, and they've kind of wrapped up the physical therapy market. They have 900 locations, and in fact, I've been a client of theirs. I had some knee surgery a few years ago. And, as I wrap up, they're like, well, you should go to ATIP. No question about anything. It was just like, go there. It's cheapest. Your insurance likes it. It's like $40 an hour. It cost me out of pocket. I'm like, this is great, right? They probably got 120. We're going to talk about that. Wheels within wheels. Wheels within wheels. Circles within circles, right? So for a while, I was thinking about the stock market as... it either all goes up or it all goes down. I was thinking macro. I was thinking about the trend. And in fact, what I realized is there's stocks that go up and down regardless of how the market's moving. And those are ones we want to talk about. And we ran the model this week. And oh my gosh, really successful run. And I want to talk to you guys about what we learned. And we actually tweeted out some good information. And I think it was profitable for anybody who read it and did their due diligence. And so much to talk about. So let's start it off. Start it off by saying, here's a tweet we sent out. Let me go through a couple tweets. I just want you to see it. So CQNS, which is our model, Chicago Quantum Net Score. Thumbs up. Hit the target. Green heart, money heart. Bitcoin miners, semiconductor equipment, large utilities, consumer products, Canadian financials, and garbage and recyclers were loved by the model this week. And what it meant was, as you went back through the past year, there's a lower risk profile of the stock prices. I'm going to grab my coffee. So what does that mean, Jeffrey? It means less risk. Less volatility, less stock market volatility, less ups and downs, right? Well, that's great. Less ups and downs. So why is that good? Well, it's good because if your money's there, you don't want to lose money. You don't want to have that kind of volatility. You just want it to go up, and you want it to go up in a smooth way. Most people don't like to lose money. They hate to lose money. They hate to lose money more than they like to make money. And so the idea here is you've got stocks that are kind of flatlining, and going up and flatten up, you're doing well. So the model finds those. By the way, on the other side, we find stocks that are just garbage. They're very volatile without going up. And then we added some more data to our runs, and now we're finding stocks that are just the worst performing stocks in the market. And let's try to discuss and figure those out, right? And so it's good. It was good. Let's see. Did anyone actually look? Yeah, we had 100 people look at the tweet. 101 look at it. And so if we go back and look at any other tweets that we sent, oh yeah. The Chicago Quantum Net Score does not like LWLG. That is the least effective stock, the least efficient stock in the whole market. Meaning it goes up, it goes down, and a lot of volatility relative to its beta. So LWLG, light wave logic. Well, it's down 6% today. Over the week, went up, it's coming down. You see how it's just like really, really climbing up. It is effectively a memed stock because as you look at it, and this is where it's going to be important, right? We're not able to look at all these stocks, right? It's crazy. What, I'm going to be looking at 3,000 stocks every day and thinking about it? No, I got the model to do it. And so this stock was just a dog shit, 100,000 shares a day trading at about $1.50. It's a $1.50 stock. And what happened is it got driven up to $15, 10 times growth. 1.8 million shares, 3.65 million shares, 4.4 million shares. Next thing you know, it closes at $10. And then it's just kind of riding this nice little wave here. So it got memed, it got pumped and dumped. And it looks like maybe there's some attention on it, right? September it picked up. September you had 2 million shares trading a day. Now we're coming up. So I don't know about you, but I look at this and I think, God, what a crap sandwich, right? You're going to be left holding the bag at $10 a share for a $1.50 stock. So the model isn't like that. You shouldn't like that. You should be thinking LWLG is not a stock I want to have in my portfolio. This is just how you use the data, right? Like we're sending out these tweets. Let's go back and see what else we tweeted. Oh, it loves Red Heart, Mara, Riot, CLSK, BTBT, and growing. So these are 4 Bitcoin miners. It's been loving Bitcoin miners for like 2 months, but recently, wow, booyah, right? And then it likes a grower. So let's take a look. I think I got them here in the thing. So where's my Bitcoin? Well, I'll just tell you, they've been going through the roof. So Bitcoin's a little weak today, but in terms of Mara, is at 51. It loves CLSK. It loved Riot. It liked BTBT. And where's my grower? I don't have it saved. I'm going to pop it up here. Get rid of IBM. IBM sucks. GRWG. Grow Generation Corp. It's a vertically integrated grower out of Canada. So we look at that stock. The model likes it because... Okay, Jeffrey, why is the model like grower? Because look at that flat line. This thing was a great stock. This thing popped. This thing moved. This thing had real pizzazz. It had real volatility. And then all of a sudden, they had a bad day. August 12th. And that was it. Starting on August 12th, this thing dropped like a rock. It lost, and it lost. And now it's down. So this was a $40 to $50 stock that's now trading at 20. The model likes it. So we like it, right? Because it's down. It's moving. You can still make your 5% a day, but it's down. And so maybe that's one to keep on your radar. Maybe that's one to put in your pocket when you're buying all those high flyers. You got a couple flat, right? So you're getting maybe a little bit of value here, right? Let's look at what else. Let's look at Mara. And let's look at that over the month. So Mara was $30, $32, right? Now it's at 50. It popped to 53. It's been nice and solid with support at $50. CLSK, we started calling that a few weeks ago. Let's look at it for the month. Booyah. Yeah, this thing's $12. I remember calling, I emailed a client, and I'm like, don't buy this other one I gave you. Buy this one. Sorry, Jeff, I already spent my money. That's fine. So you almost doubled your money from that phone call when the model started picking the stock. So why did the model pick the stock? Well, look at that flat patch. It's a mover, but it flattened. And what happens is it flattens enough to kind of wring the volatility out. The memers go look somewhere else. And you're holding a jewel here. Okay? Riot. Look at that flat. Now, maybe Riot's flat because of something technical. Maybe there's something fundamental about the company. Maybe the technology. Maybe the Bitmine coin. the miners, the ant mines they're using aren't good or something. I don't know. But if you just look at it from a technicals perspective, this stock has been flat as a pancake since mid-May. And yet this is a hot area, Bitcoin mining. And when you go back, you see that this stock could really take off. This was a $2, $3 stock, and it popped to 70, right? It really moved. But now it's kind of settled down around 25 to 30. Okay. Well, model doesn't forget. It can move. Right now it's not moving, right? You know what else the model likes? So hang on. Let's go back to the tweets because I want to be... there's a point here, right? Which is I'm tweeting out interesting stocks and I just want to talk about it. I just want to talk about what we're finding and what we're seeing. And so I'm sending out a lot of tweets lately. I think we're going to have to be good enough here. So just telling you about kind of how we're doing it. So if you like to get these kind of tweets, if you want to hear what we're thinking, and we've got a lot of stock ideas, right? It's Chicago _quantum. Chicago _quantum gets you access. We have 2,140 followers, and this is really my only social media channel because we're under additional review to be registered investment advisors with the state of Illinois. We've canceled all of our other social media. We used to use LinkedIn. We used to use StockTwits. We used to use Facebook, Reddit, you name it. All gone. All we use is Twitter. So if you want to find out what we're thinking, you get on Twitter. By the way, we don't make any money on Twitter. It's not what we're about. It's just a way to communicate. Because we want you to see what we're doing. We want you to see what we're thinking, right? So drop that. So some other stocks I thought were interesting. IonQ. Just to talk for a minute about IonQ. IonQ is an overpriced piece of garbage. Okay? It's a SPAC. It's a company that has 11 qubits. I just want to explain something for a minute. Now, maybe in the future, quantum... And we love quantum computing. We're Chicago Quantum. We're all about quantum. We want quantum to win, right? We really are. We're founding members of the Quantum Economic Development Consortium. We are part and parcel of the system. We like quantum. We follow the national labs. We're in the chat rooms. We're in the email lists, right? We even like post-quantum crypto. But let me talk a little bit about IonQ. IonQ is a really cool technical research project. It makes me feel so happy when I find out that IonQ is doing something cool. I love it, right? And so you take a look at the stock. Okay? It was a $10 SPAC. Popped up, popped down. So with a SPAC, most of the shares are controlled. So you've really got a situation here where there aren't a lot of shares in the market trading liquid. It's cool. It's quantum. So let's go for it. Now, we looked at the press release for IonQ, and it was the kind of stuff that we might send out as Chicago Quantum. Oh, they're speaking at IEEE. You know you have to pay IEEE to get a speaking slot? I mean, maybe you're IonQ, you don't have to pay. But it's like $1,000, $2,000. I mean, it's worth it to get that kind of promotion, right? You're in front of a lot of people. And so they have 11 qubits. 11 qubits is like an abacus. 11 qubits. This is 11 qubits. Okay? Do you know where I got this from? Dollar Tree. Do you know 11 qubits? I can do 11 stocks. All right, that's something. Pick 11 stocks. Out of 11 stocks, pick me the best one. Well, today we're looking at 3,116, down from 4,300 because we applied some additional filtering. And I don't know what I'm going to do with 11 stock picker. Honestly, I'm not going to do anything with it. I mean, I might do an experiment. I might say, oh, want some magic stocks? Oh, magic. Right? Not logical, not based on data, but magic. That's IonQ. So what's IonQ's revenue? I did a little bit of due diligence. It's hard to find out. You really can't find out. It's really not around. I looked at the quarterly. I looked at the prospectus. So let's assume the revenue is $50 million. Now they sell on through Amazon and they sell direct. So $50 million in revenue, 11 qubits, right? Shoot the moon. Oh, the company's worth $2.7 billion. I bet they're lucky if they have $100 million in revenue. My guess is they have $50 million in revenue. And a lot of that is government grant money, which is going to be margin free. So, all right. Someone's been pumping this bad boy, though. Look at that. So that becomes a short opportunity. However, be very careful because there aren't a lot of shares. And they're tightly held, probably by the people that own the SPAC in the first place. So I look at that and I think, danger, 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 run away, IonQ. Okay. There's another one called Qubit that we were following, and these are a lot of stock ideas. You take it or leave it. This is for entertainment purposes. This is not investment advice. This is just what we see. So I looked up quantum computing. I knew the guys, the two leaders. I met them. They're nice guys. They're working hard. They're trying to build something, right? The good guys are working hard. They're in the space. They're in the quantum meetups and all that. And so you take a look, and stock's not really moving that much. It's kind of a dog. Now, they recently got put onto NASDAQ capital markets, which was great because they were like pink sheet. So they're in the game now, right? They're listed in a major exchange. So stock's right around $6. It hasn't really moved much. It's fine. Do you know this company has less revenue than we do? Do you know Chicago Quantum has more revenue than Quantum Computing Inc.? They got plenty of expenses, though. They got a team, I want to say 50 people. They just hired a really good guy. I really like the guy from a company that had revenue. He's a customer service guy. PhD, super bright. I love this guy. In fact, I'd love him to work for me. Hey, if you're listening, call me. I got more revenue than your employer does. Oh, look at that. So, here's the point, though. It's $180 million for a company with no revenue. Big loser, right? I don't know. Oh, Rebel Brown. Rebel Brown. Who has the first name Rebel? Anyway, that's weird. That's a weird name. Okay, Rebel. Oh, I'm a rebel. I'm a rebel without a qubit. Because they don't make qubits. They do software. We make software. We have more revenue than Quantum Computing Inc. Maybe we should talk, right? But someone's pumping that stock. Pumping it like a bad boy. And so these are just trends within trends, markets within markets, right? So gold, I love gold. I'm a big gold bug, right? Under 1800 again. So when gold goes down, it means that interest rates are going up. So let's take a look at interest rates. Last time I looked, they were 1.55. So here's the thing with interest rates, right? They should be going up through the roof. We're going to taper. We're going to do all this stuff. We got inflation. We're going to have to close the gap. So you see that line? You remember those lines? I used to draw those lines, right? I haven't drawn that line since August. It's a regression line. It's a regression on interest rates. Oh my God, you could balance a table on that. Look at that. Interest rates have not moved. 10-year rates have not moved since January. And I bet if I pull, it's January 20th, January 25th, and interest rates are flat as a pancake. So what does that mean? Jeffrey, why do we care? Well, here's why we care. Inflation's through the roof. Oh, everything's going to cost more. Labor's going to cost more. Remember I showed you the picture off my wall? I'm going to show you again. You're going to love this picture. This is my favorite picture. Okay? It's from 1963. It's a political cartoon. Wages and prices in a race. New leg of the inflation race. Big government boosts pay. Think of that as the money that they're sending us, all of us Americans that aren't working because of COVID. So you pour cash. It's like pouring gasoline on a fire, right? Inflation's up. Oh my God. But I don't know that that's the case. So we're going to take a quick look at Fred. Fred is the Federal Reserve St. Louis information. So let's look at the velocity of money. This is, for me, the one thing that really drives inflation. Because if money is not moving, you could have a lot of it. It's like a stagnant pool. And I remember talking to my client, one of my clients, and I said, the whole thing is about velocity of money. And he goes, Jeff, I think it's going up. I don't buy it, right? Money never sits still. Well, let me talk to you. A velocity of 1 means money sits still. 1.115. October 28 update. There's no velocity of money. Money is dead. Let's take a look. Let's go back to 1960. Oh, 1950s. Velocity of money 1.7, 1.8. It looks like historically it ran about 1.7 to 1.9. Popped up in the 90s, right? The Clinton years. God, those were good years, right? It's been a steady secular decline, and now 1.15. So why is that? Why is money not moving? So inflation, depending on how you think about it, inflation could be as easy as we print money, and therefore it's a closed system. We print money, monopoly money. Oh yeah, more hundreds. All right, pass go, you get $200. More money means the properties go up in price. It's fine. That's one definition of inflation. The other is that the amount of money that grows in the bigger system is compared against the growth rate, the number of transactions, the amount of transactions. And so if you have $1 billion of transactions and $1 billion of cash, everything's $1. If I suddenly have $2 billion of money and $1 billion in transactions, everything is $2. So there's growth rate. You can look at growth rate. And so the thing that I look at, I look for logic that says, where is the money? Okay? Reverse repo is where banks have excess reserves and they put the money to the Federal Reserve, who gives them a very nominal, I want to say it's like 6 bips, 6 basis points. It's nothing, but at least you get something overnight, right? It's 0 if you hold the money in your own vault, but you give it to the Fed, you get a little money. So you see how it's been climbing since 2021 March, when we started pumping liquidity, when we started basically quantitative easing. And now we're at $1.384 trillion. So every night the banks have an extra $1 to $1.5 trillion. They're just going to park the Fed. So why is that? Jeff, where's the where is there any more money? Like, really? Like, I'm not. Let me take a look. I don't even have a wallet anymore. Where is it? Do I have more money than I used to? Let's take a look. Oh, I have a 20. Okay. I don't have more cash. Do you have more cash? Do you, as a listener, have more cash than you used to? My guess is you don't. But someone has more cash. Because let's take a look. There's $21 trillion of money in circulation. Do you know in the 60s there was 300? 100 times more money. 80 times more. 75 times more money. Holy shit. I'm sorry for the bad language, but it's just shocking. In 2016, there was 12. Now there's 21. When did it really pop? It really popped here. February of 2020, just before the pandemic, we had 15.5. Now we have 21. That's 40% more money in a year or two. And it's not declining. We're still making $100 billion to $200 billion every month. We're making money, and now we wonder why there's inflation, right? Make money, economic growth is flattening, in part because of our labor shortage, which we're going to talk about. My God, I wish we had all day. And so that's the problem. More money, economy's flat, velocity's flat, which means there's nothing sucking up. Actually, velocity fell because more money is sitting on the Fed balance sheet overnight. So I don't know. There's a lot of cash out there, though, is what I'd say. Let's take a look at the stocks. These are some stocks I'm following. So Workhorse, we're going to be buying some Workhorse when I get off the phone here. I'm going to wait till it drops a little more. Wheels within wheels. I learned something very recently, and I want to teach you what I learned. I love this stock. I'm going to make so much money on this stock. It's obnoxious. So you look at the stock over a year, and you're like, oh, it's a piece of crap, right? It was up high, down, pretty flat to declining. And you think, oh, it's crap. I hate the stock, right? It's down. But the truth is, it's a great stock. It's a great company. It's a fundamentally awesome company. They make electric trucks, C-Class. You know the big UPS truck that you see, the brown truck that delivers a lot of packages? Imagine that is made out of electricity, with electricity. Now I want you to imagine that they got a drone on the top. I'm not making this up. This isn't science fiction. They have a drone on the top. And they're going to deliver packages to farms, to businesses, whatever. Drone them right in. Now, the good news is the truck keeps going to its other delivery. So you could be doing 2 deliveries at a time. It's nice. It's a cool thing. I don't know if it's going to work or not. But these trucks, so they just had a recall. The electrical needs to be modernized. I get it. They just bring in a new CEO. The guy was at Delphi. He was a CEO at Delphi. That's a major part supplier. This is a major insider. And you know what else I like about these trucks? They're made in Ohio. They're not made in China. They're made in Ohio. Ohio with American workers. Now, the truth is, they just missed a big Postal Service contract. They weren't ready. They could barely make 100 trucks a month. It'd be nice if they made 100 trucks a month. But so, this is highly speculative, but if they could scale and grow, wow. It's an American success story. But what I noticed about this company is every day it pops. Every day it pops and it drops. Pops and it drops. So you know what I did? I bought it here at about 6:31. And I watched it pop and I thought, oh, things going to 50. Don't sell. It came down. I'm like, aw, what happened? And then it popped. Oh, going to 50. But that day, it went up to 710. I put it in order for 710. I didn't get hit. It traded at 710, but I didn't get hit. And then it dropped back down to 640, and I thought, So yesterday, I sold at 709. Now, it popped high. It popped for like a minute to like 740. I made money. I felt great. So I said, you know what? This morning, it's going to drop. It's going to drop, and I'm going to buy it back. I'd love to buy it back at 6:30, where I had it, because then I'm going to ride it up again. Because you know, at about 1 o'clock, it's going to pop again. The stock is building a trend, a circle within circle, a wheel within a wheel. Workhorse. I don't know why, but people are playing this thing up and down all day. And you know what? I'm jumping in it. I'm going to play it every day it wants to play. Because I like the stock at 750. I like it. I like the fundamentals of the company. It's a no-lose for me. But if I can pop and make 5 or 10% every day on my money, I could buy groceries with that money. That's nice. That's a wheel within wheel. I want to talk about another wheel. So I'm watching this today. It's 677. Do you know this morning it was at 715 already? 716? I mean, I would have made 40 cents if I would have shorted it. But I don't short. I've never shorted a stock in my life. I don't like it. I don't believe in it. So let's look at ATIP. So I'm a simple guy. I just want to talk to you about this. ATI Physical Therapy, I got physical therapy from. I used to know someone that owned a physical therapy business. They owned 2 businesses. If you're out there, hello. You know what I'm talking about. And they had to close one of their businesses because ATI came to town. Cheaper, more effective, better insurance coverage. People were like, hey, I pay $40. Why wouldn't I go to ATI? And my doctor tells me I have to go to ATI because its systems are all integrated. Oh, I love it. Bolingbrook Company, 900 stores. And they're right by my fitness center. So I go to the club with my wife all the time, and it's right there. I mean, the brand is just imprinted in my head. If I ever have the other knee operated on, you know I'm going to ATI. No question. Okay? Oh, they had 882 owned and 22 managed clinics. It's Bolingbrook. Okay? So I look, and I look, and I look. And it makes money, actually. It's a good company. It makes money. Now, they did have a huge write-off. Oh, my God. Non-cash. Non-cash write-off. You know what that's like? That's like... I'll tell you what a non-cash write-off is like for a company like this. I just created a $1,000 bill. Oh, look. $1,000. And I ripped it up. It was paper to begin with. It's goodwill. And it's paper now. I look at my wallet. I bet you my 20's still there. Yeah. Okay, I didn't rip up the 20. I ripped up the $1,000 paper money. The goodwill. The intangible asset that doesn't really matter. So let's take a look at this chart, the stock chart. So when you look at it over 5 days, you think, oh, this thing's in a trading range. I'm going to make money here, right? I'm going to do something. And I'm looking at the book. There's not a lot of shares being offered. It's 16,000 bid, and it's 36,000 ask. That 2-to-1 ratio is not normal. See, normal, let's look at Workhorse. 500,000, 3 million. That's a 1 to 6, 6-to-1 ratio. That's normal, right? And actually 10-to-1 in a lot of stocks I follow. So this is not moving. It's a slow mover. So let's take a look. Let's go back a year now. Ugh, this hurts. This hurts. This was a $10 stock. By the way, I learned a lot. I did some due diligence. So we're gonna get there. $10 stock. It jumped to 12.5. Kind of reminds me of IonQ, right? Acquisition, merger, SPAC, $10, jump in. Trades at 10 for a while, and then, oh, look, it hit 7.5. Boom. 385. Boom. Another one. They're going to have earnings release soon. So, ATI Physical Therapy is now under investigation for misleading investors. But let's talk about why. What happened? What happened to ATI? Okay, so 2 things happened. One, I did a little due diligence. By the way, so if you go to SEC Edgar, they have a company search. Don't trust Yahoo Finance or MarketWatch or whatever because they make mistakes. Trust the government filings that the company itself makes. Just type SEC Edgar search. Boom. And then you type in the ticker, ATIP, and boom, here you are. So I looked at the prospectus. I looked at the current report for earnings. So they have an issue. Here's the issue. The physical therapists are quitting or not coming to work. They're not coming to work. Now, maybe they didn't get their COVID vaccine. Maybe they just don't feel like working. They don't want to. You got to be like face to face with the client. I remember when I had therapy, they're touching my body, move your leg this way. Here, let me throw a ball to you. Get on the thing, use the equipment. Let me stretch you. Well, so here's the thing. An older person with surgery, right? Now I'm touching people. It's very close. It's not a good COVID situation. So they're quitting. So the company just came out, and I listened to I read the earnings transcript from the last call. So now they're hiring 2 physical therapists for every one that quits, and they're finally coming back. They're raising wages, and they're double hiring. Well, that's not a way to make money sustainably. I mean, I guess you got to recover, right? So they're hiring anyone that they can get. The other thing is the number of customer visits has fallen. I want to say they're down to like 20,000 visits a day. With 1,000 stores, let's just round it. 25,000 with it's 25 visits a day. Each visit's like 45 minutes. You don't need a whole bunch of employees. So now they're hiring up the employees and the people aren't showing up. I don't understand. It's not good because you're going to see the same thing in healthcare with HCA. I just heard about it on the headlines with Amazon. Amazon's having issues. They can't grow because they can't find the employees. So ATI physical therapy. So if you're a physical therapist, you trained for that. It's not like you're bagging groceries and you don't feel like going to work. Although, to be honest, I've been bagging a lot of my own groceries lately because when I go to the grocery store, the baggers are overworked. They're overstretched. There's one for every 2 lanes now. It used to be 1 for 1. So, I don't know about you, but labor's an issue. And so ATI Physical Therapy is probably going to announce in their last earnings that labor costs are up. I'm having trouble keeping my stores open, and I can't find good people. I think you're going to find this throughout the economy, right? Anyone who's labor-based, education, retail, shipping. Fedex Stock is one of the worst performing stocks of the big companies. Let's look at FedEx, right? And they were one of the earliest to come out. And now, they're probably unionized. And they probably can't do a lot of the things that an ATI can, ATIP. Well, actually, it doesn't look that bad. FedEx. No, yeah, it does. So this one's like a cyclical, riding with the market. That's actually a pretty big cycle right there. And then down. Drop to its low from 2021. My guess is I go back 5 years. Yeah. It's up over 5 years because FedEx is a brand. It's a franchise, right? It's got a long way to fall down to $100. But FedEx is saying, look, growth can't do it. No labor. So the other thing that I was looking at is, macro. Now we're talking a different wheel, right? So first thing I'm talking about is companies like Workhorse, right? Oh, let's go back to ATIP for a minute. I did more due diligence. There's a reason I came here. And, there's a place to find out. There's a stockholders agreement. Lazard has 0 shares. So Lazard got out. Okay? Maybe that's why the stock dropped. Fortress acquisition sponsor, still beneficial owner of 19 million shares. There's a lot of stuff here. Let's just get right here. Here it is. Advent International Corporation. The Advent International Corporation owns 130 million shares. 63% of ATIP. So let's be honest. Owned in Bolingbrook Company. I can imagine a mother, a father, a small business owner. And he's like, yeah, I got this, and I'm building it from the ground up. No. He sold it to Advent International, who, by the way, they also sold it to Fortress Acquisition Corp. Oh, and don't forget Woco. Woco Acquisition Corp. Okay? Woco. What the heck's going on? So what happened was there was a merger. Fortress Value Acquisition, like a SPAC, acquired Woco Holdings, which I believe was then acquired by Advent Trading. Oh, these are actually Woco is an Advent Luxembourg fund. And each of the Advent Cayman funds. And they operate out of Boston, by the way. But we're in Luxembourg and we're in the Caymans. You can't make this stuff up, guys. So they own 2/3 of it. So who's selling? My guess is Advent can't be selling. So who's selling? Let's take a look at FinViz and find out who owns it. Like, what's going on? So I go to ATIP and I look at holders. And it says that 99 and 2/3 of the shares are owned by institutions. 97 and a third is owned by institutions. 99.3 of the float is owned by institutions. So are the institutions selling ATI? Well, Lazard's out, so maybe they already sold. Who's doing it? Maybe the volume is that low. But I'm looking at what they're trading here. 21,000 shares traded. There's very little on the table. They own 130 million shares. Advent, Luxembourg, and Caymans, and Fortress, right? It's not even Fortress is different. I think Fortress is another 10%. So who's got it? Where's the money? Who's shorting this thing or selling this stock, right? How many shares? 15,000 shares are being bought. 39,000 are being sold. So this is all at the margin. This is all like little something. My guess is if I were to go to TweetDeck, I wouldn't see a single post on ATIP. Let's take a look. This is one of my sources I like. By the way, I love stocks. I love the stock market. Always do due diligence because you could have bought ATIP and not realized that 99% of it or 97% of it. Look, why can't I stop watching this ATIP? It's a complete dog, yet I cannot remove it from my watch list. Thinking about leaping ATIP. Company's a dumpster fire. But it's priced like it's going out of business. Looks oversold. I mean, what's happening is I only mention ATIP because it's probably the most drama since de-SPACing with earnings. So, they sold. Oh, November 9th. Or are we secretly pretending that it wasn't a SPAC? So, no one even knows what's going on with ATIP. I didn't know until I look and I see that Luxembourg, Caymans, come on guys. So we're going to get back to this chart. There's a reason why I was showing it. Let's see if I can get a chart on ATIP. I like FinViz a lot. So for the year it's down 74%, or year to date. For the year it's down 72%. This really is a dog. Look at that thing drop. Drop like a rock. Average trading range, average trading range for the day is 23 cents or 10%. You could make a lot of money trading this stock. If you were like a range trader, 10%. Loving it. Just know which way it's going to go every day. The problem is it drops 30, 50, 70%. You're stuck holding the bag. Earnings per share is up 150%. Now they're saying earnings per share is minus 367, but that was that paper money I told you about ripping it up with goodwill. Price to book is trading at half a book. It's got cash per share of 44 cents. It's got book per share of $5.84. Oh, it's actually trading well below book. So, it's a great stock. I want to buy this stock all day. All day. I want to buy this stock all day. Okay? Trades below book. It's got 99% in institutional holdings. Why did they even have any shares out? Why doesn't just some private office, like a family office, just buy the thing up? But they're letting it trade. They're letting it trade, and guys like you can make money out there, right? Because you're the 1%ers. You're the rats that are scuttering around. You pick up a few shares. You wrap it up. It doesn't take much for the stock to move. Let's see what the volumes are on this stock. Let's go to historical data. By the way, thank you, Yahoo Finance. So, yeah, yesterday didn't trade much. 244,000 shares, but it was 1.3 million the day before. It was up to 15 million October 20. Looks like it trades either hundreds of thousands of shares or millions of shares, or like a million or two shares. Back in the day, they had a 100,000 share day. So, not a crazy stock. Not a lot going on. So, to me, if you're a bargain basement kind of investor, ATIP looks good. You might be sitting a long time though. Warren Buffett says, be patient. So I'm looking at ATI as a wheel within a wheel here, right? 99, 97, 99% of the float is controlled by institutions. This is not for the faint of heart. So I want you to think about something. Harry Potter. Harry Potter, what was the name of that thing? Alchemy. Alchemy. Harry Potter. See this thing right here? The alchemy shrinks in size or grows in size to fit the container. So I want you to think for a minute. It was in Fantastic Beasts, the movie. If the owners of 99% of the stock want to get out, they're going to get out. It's going to be a penny. Okay? The price of the stock will drop to accentuate, to allow for the flow to happen. Now, if those guys want to buy a little more, the price will exponentially grow to release those last couple of shares. The alchemy is like a thinly traded stock. It grows or it shrinks in price to fit through the door. You guys know I was long SMLP and I'm a big fan of the stock, right? Same thing. The stock goes up or it goes down based on the overall demand, and there are bondholders and warrant holders that still want to get out of that stock. But there's not a lot of volume. And so look at that. It's down to 31 and a quarter. This is a $100 book value stock. It's a $100 book value stock. I love the stock. I love SMLP. I just want you guys to know that. I am not long SMLP. I sold it at 27 not that long ago. I think went over 40. That's another one that goes in my bargain bin. SMLP, ATIP, and there's others. So let's see how Workhorse has been doing. It's a 683. I sold it at 709 yesterday. That thing's good for another 20 cents down. I'm going to watch it. I want to buy it back at like 650. I'm hungry for Workhorse at 650. 630 is even better, right? Because I know the thing's going to pop to $8 again. We'll wait. You wait with me. You watch it. It's going to go up and down, day after day, for like maybe 3 more days. And then you're done. Then you got to find another stock that's up and down all day. Let's go back to that chart I wanted to show you. So this is FinViz. And so let's take a look. So what do you notice about this chart? This is the 1-day performance, FinViz. What you notice is, first off, the big boxes. So the way you read this chart is that market cap is size, and color is change. So the first thing I want you to look at is how energy is all red. Restaurants, mixed. But it's the biggest boxes. Some of them are red. Amazon is down almost 4%. Apple's down almost 4%. Now you would say, Jeff, who cares? Apple's down 4%. But Apple is like a $2.5 trillion company. So there's a lot of investment in that company. And so when it drops, let's say it drops 1% on $2.5 trillion. That's like $25 billion of market cap lost. Charter Communications down. Amazon's down. Starbucks is down. And the whole energy sector took a dump, except for the 2 largest. So, what's going on? The banks have been pretty weak lately. Credit services are starting to recover. But so, when you're looking to raise money in a hurry, you sell the stocks that are the most liquid. So there are days where if you see Microsoft, Nvidia, Google, Facebook, Amazon, Tesla falling, you know it's just that people are selling their S&P 500. Here, it's a little more specific. It's Amazon and Apple. Makes you want to look. Now, if you look for the month, you see that credit services are down. So what happened? Is it that Main Street is down? Tobacco's down. Airlines are down over a month. Industrials are down, especially defense. Intel has been a really poor performer over the past month. And my guess is we're going to see IBM here somewhere. There it is. IBM's down almost 10% for the month. So those are firm-specific issues. Fiserv and Fidelity National Information Services are down. So certain IT providers are down as well. DXC is down 5%. So IT services sell to financial services. And if financial services aren't doing well, then you know the IT companies aren't going to do well because they sell things to the financial services firms for the most part. So another wheel within wheels here, because now I got weakness in financial services, maybe driving IT weakness. So what else did I have? Oh, Verizon. So when interest rates decline, utilities are good. And when interest rates go up, utilities are bad. Because relatively speaking, the safety, the dividend, the almost 5% dividend of Verizon is worth more, relatively speaking, when interest rates are 1.5% than if they were 5%. If interest rates go to 5%, nobody really wants to hold Verizon because I can get 5% for free by buying treasuries with no risk. Here I got operations risk. So I've been following Verizon because Verizon has been preferred by the model for about 3 months. And you'll see over the last 3 months, this thing's been in decline. The funny part is it doesn't decline that much. The whole thing is down like 1.5% since we picked it. 58, let's say we picked it in May. $59 to $53. It's $6, 1%, 1.2%. So, whoa, real scary decline, Jeff. But the model likes this stock. The stock has been rising through the ranks. It likes Verizon. I mean, you might look at Verizon. By the way, it likes it better than T. It likes it better than AT&T. You may say, Jeff, why does it like it? Let's go over the 5 years, right? Over the 5 years, it went up. It's been pretty flat. And then, yeah, it started liking it here when it started to drop. So this stock, relatively speaking, has more value than it's had in a very long time. So we did our due diligence. What's going on? I got to write this down. We talked about ATIP. We talked about SMLP. We're talking about VZ. We're talking about Workhorse. We haven't even gotten started yet. The problem is, the thing is, it's a long video right now. We probably shouldn't be talking this long. So Verizon is interesting. So what's going on with Verizon? So, by the way, I pulled the financials. I looked. Let me tell you what I found. And I'm just going to use the core page here. I don't even need statistics. The company is worth about $200 billion. 220. Let's look at the financials. Quarterly balance sheet. Remember that number, $220 billion in equity. Total debt is $150 billion. But there's net debt here. This is actually, no, this isn't right. I need quarterly. Those numbers aren't right. I know they're not right. So net debt is another 140. Let's call it 150. Okay? So I'm at 220, 150. That's 375, say 400. I'm worth 400 billion total. But the truth is, it's worth 220, and they just borrowed $50 billion to buy spectrum from the federal government. They bought spectrum. They bought waves. C-band. 5G. We're all going to have 5G on our phones. It's going to make my social media posts that much faster. Oh, yeah, Jeff. So when you send an email, it's going to go even... No, that's not helpful. It's not about emails. It's about edge computing, mobile computing, enterprise computing. It's about data sources. It's about flow. It's a major investment in 5G using a new C-band millimeter wave. I want to say it's 3.5 to 4 gigahertz and above. And this is gigahertz. This is so much bandwidth and so much capacity. It's great. And Verizon is taking a leadership role. They won a lot of spectrum, $50 billion worth. And now they're probably spending, I'm just going to guess, 10 to 15 on the rollout. Buying equipment, putting up stations, and then they got to make the phones. They got to have the phones that you buy, right? And so now, I think I read, like a free phone, or we're going to guarantee you a nice Samsung 5G. So here's the thing. They got to pay for all that. Let's say it's another $15 billion. So now you got a $65 billion bet. 65 out of 220, that's about a quarter. They're betting a quarter of their value for the whole historical value of the company on 5G. Now, if they win, wow. They own the U.S. market for a generation. If they lose, they got to pay that debt back. And that's going to hurt. How much cash do they produce from operations? Quarterly basis. Let's just see. Operating cash flow runs about 10. So they're going to have to spend 6 quarters of cash just to pay back if it's a failed investment. With interest, maybe it's 7 quarters because I got to pay the interest. If it's good, you're going to make a mint. You might double that operating cash flow. So I just want you to think about it. Look at that investing cash flow. 62. I didn't make this up, people. $62 billion invested in the last 12 months through September 30th. And you know that number is just going to go up. To bet the business. So, do you believe? Verizon is a do you believe. The model picked it so that you could do the due diligence and understand that Verizon is a bet the farm technology and bet. I never knew that. There's a battle going on, and the U.S. is right in the center of the 5G battle. And it's a $62 billion investment already made for 12 months, probably another 10 coming. Boom. So I love this. I love that the model gives you the couple of stocks to look at, to do your due diligence and go. And by the way, if you buy a couple hours with us, we'll talk to you about it. It's not investment advice. It's really research. We'll talk to you about it. We'll talk about inflation and the numbers, talk about the companies. We'll do the due diligence with you. We can walk through a lot of what the model showed, maybe even historically, what's going on with Verizon. Why did it get picked? And what are we going to do about it? And so I want to thank you for listening. There's a lot going on here. We didn't talk about the D-Wave. By the way, we got the D-Wave to run. Yay! We picked stocks with a quantum computer this week. And we're going to do it again. We're going to do it again, and I like it. It's fun. Quantum stock picker. I got that. You know, I once made a post. I was going to hire someone. I said, quantum stock picker. You know, I got a Joule stock picker to apply. They're like, yeah, I don't know about quantum, but we're really fast picking stock and putting it in a cart, you know. Stock picker. So, all right, a lot going on. I want to hope you the best of luck, good success this week in the stock market. Take care. Bye-bye now.